Welcome back, traders. In today's video, we're going to dive into one of the most powerful chart patterns in technical analysis, the dragon pattern. Whether you're a beginner or an experienced trader, understanding and effectively trading this pattern can greatly enhance your profitability. So, let's get started. Hey, everyone. I'm Sumitra, and I'm excited to have you here today. In this video, we'll cover everything you need to know about the dragon pattern, including its characteristics, identification techniques, and strategies for successful trading. So, let's jump right in. Just like most double bottom patterns, the dragon pattern presents excellent trading opportunities with low risk to reward ratios, and the most beautiful thing about the dragon pattern is that it works in all time frames and in all markets. The dragon pattern is similar to the W pattern or the double bottom pattern with few different trading rules and different targets. Inverse dragon patterns are similar to M pattern. Dragon patterns usually form at market bottoms. The dragon patterns start with a head formation and price declines from the head level form two legs of the dragon. These two legs in a dragon pattern usually form within 5% to 10% of the price difference. The second leg has a strong indication of reversal as it posts a key reversal bar, or a divergence in any oscillator indicators. The price rise in the second leg is usually followed by a spike in the volume. A trend line is drawn connecting the head of the dragon to the hump. When the price closes above the trend line and confirmed by price action or divergence in any oscillator, it signals a reversal. The second confirmation of dragon occurs when the price closes above the hump, 38% to 50% of the range from head to the low of the first leg. Trade: aggressive traders enter a long trade when the price closes above the trend line. A better trade entry may be signaled when the price closes above the hump level. Enter a long trade few ticks above the hump level. Targets are usually at 127% of the second leg range, and another target is set at near the head level. Stop: place a stop order below the lowest low of the two legs. Let us revise the steps to formation of the dragon pattern. First there is a head, then the price slumps to form the first leg. Then we should see pullback of 38% or 50% to form the hump. That is, if we mark the head as A, and the first leg as B, the pullback will be 38% to 50% of AB. Then the price will start to fall again to form the second leg. It should be around 61% to 127% of AB. By AB, I mean the head and the first leg. Here we can draw a trend line connecting the head and the first leg. The price moving above the trend line would be breakout and our trigger for long position. The first target would be 127% of the hump and the second leg. CD: the second target would be 88% to 100% of the first leg to the hump. BC: the third target should be 138% of AB. Always place a stop a few ticks below the lowest low of two legs. Look at this chart, which shows a dragon pattern formation from the Dow M&E Futures 30-minute chart. On January 3, 2007, Dow Futures formed the head of the dragon. Prices declined until January 8 and the first leg formation. On January 8 prices tried to recover as they rallied to 12,520. A trend line is drawn connecting the top of the head and top of the first leg. On January 10, the second leg was formed as prices retraced from the hump area to 12,420. A confirmation of dragon is first signaled when prices closed above the trend line at 12,500. 1. Enter a long trade at 12,520, close above the high of the breakout bar. 2. Target the first swing high prior to leg I at 12,570 and head area at 12,640. 3. Place a stop order below the lowest low of the two legs at 12,410. When you flip the dragon pattern upside down, you will get the inverse dragon pattern. The trading rules of inverse dragon pattern is similar to that of dragon pattern. The inverse dragon pattern forms rarely, but it is a very reliable pattern. The dragon pattern starts with a head, hump and two legs, inverse. The hump area is usually at 38% to 50% of the range between the head and the first leg. A close below the trend line triggers the first short trade. A close below the hump line to trigger another short trade. 1. Enter a short trade below the trend line. 2. Target the swing low prior to the first leg. 3. Place a stop order above the highest high of the two legs. And that's a wrap, folks. We've covered the dragon pattern from top to bottom, and I hope you found this video insightful. Remember, mastering any pattern takes time and practice, so be patient and persistent. If you enjoyed this video, don't forget to give it a thumbs up, subscribe to our channel, and hit the notification bell to stay updated with our future videos. As always, happy trading! Thank you so much for watching today's video on trading the dragon pattern. I appreciate your time and dedication to improving your trading skills. If you have any questions or suggestions for future videos, please leave them in the comments below. Until next time, happy trading!